Welcome to this Insights video. I'm Julia Lee, an equity strategist at Bell Direct, and today we're here to talk about fixed income. It's my great pleasure to introduce Mick Kays, who's a portfolio manager at Schroders, and he's here to talk about the Schroder Absolute Return Income Fund. This fund is available through the mFund service on our platform. Thanks, Mick, so much for joining us.
Thank you.
Can we start by having you talk about your fund and where you invest?
Sure. The Schroder Absolute Return Income Fund is a benchmark unaware absolute return focused strategy. It aims to deliver regular, predictable monthly income, but importantly targets low levels of capital volatility with a focus on minimising drawdowns and managing sensitivity to interest rates. By design, it has the flexibility to add value by investing across the full breadth of the fixed income universe, including currencies. It can diversify across geography, issuer type, maturity, quality and capital structure. These exposures are supplemented by active interest rate strategies, alpha strategies and currency exposures. Risk management is crucial in controlling the fund's exposures. It aims to limit correlation to equity markets and has an explicit goal to avoid negative returns over 12-month rolling periods.
So how does your fund fit in from an asset allocation point of view?
We see the Schroder Absolute Return Income Fund as a component of the defensive allocation in a client's portfolio, particularly given the emphasis on monthly income and managing downside risk. The strategy is complementary to traditional fixed income strategies, but is definitely not a substitute. With low sensitivity to rising rates, it's designed to play a different role in portfolios compared to strategies with a long duration anchor. Given the fund cannot hold equities, it is clearly outside the growth portion of a portfolio. That said, the income focus can be appropriate for clients that may wish to reduce equity risk while still receiving regular income without the embedded duration and sensitivity to rising interest rates of traditional fixed income funds.
So given that, where do you see the current opportunities in your sector and why should people invest?
Given current valuations and the stage of the cycle we're in, we see merit in being defensively positioned. We retain elevated levels of cash, a focus on high quality assets, moderate duration and explicit inflation protection. We also hold a moderate currency exposure in US dollars and Japanese yen to provide diversification and assist with downside risk management. In credit, we continue to prefer Australia to global for its high quality and short tenor. That said, global investment grade credit is starting to look more attractive given its recent underperformance. Global high yield looks expensive and hence we have minimal exposures. Also, we see domestic hybrid valuations as being stretched and hence our exposures are very low. In interest rate markets, we are short the US Treasury market given the upside cyclical outlook for higher interest rates. We also are short duration in Europe where valuations remain very expensive and bond yields are not reflecting the improving outlook for growth and inflation. The portfolio's inflation protection is split across US and Australian inflation-linked bonds. Altogether, our cautious positioning leaves the portfolio well placed to weather a near-term bout of risk aversion and policy withdrawal associated with volatility. Importantly, we are liquid and our elevated cash levels provide us with the flexibility to access additional opportunities as they arise.
Thanks so much, Mick Kays, for your time. To find out more about the Schroders Absolute Return Income Fund via mFunds, visit our website.